How we doing, Trade Flare family? Welcome back to the nightly breakdown, where we break down what happened today in the stock market, as well as give you an idea of what we're looking at into tomorrow. So from now on, we're actually going to change up the way we do things. We now post a nightly breakdown every Sunday, Tuesday, and Thursday. And on Sunday and Tuesday, we're really going to focus on, key points and all of that stuff, trying to get an idea of what's going on around us and what to expect heading into the rest of the week. But on Thursday from now on, we're really going to be focusing on technical analysis, more plays, and really getting some play ideas heading into Friday, where we can trade some dailies. So first off, we're going to go over breaking down the SPY, the Qs, and then we're going to break down a few sectors that look good heading into tomorrow. And then I've got 6 tickers that look pretty decent for a day trade, maybe looking to trade dailies on these tomorrow. We'll talk about what needs to happen and what I'll look to do with some of these contracts. So with that being said, let's dive into it, starting off with the SPY, which tracks the S&P 500 index. And as it stands right now, especially with the earnings that we got after hours, we had positive Snap earnings, positive Twitter earnings, and overall we had a positive reaction to the earnings after hours, other than the fact that we heard Intel Core say that the chip shortage could last into 2023. So we'll keep that in mind as we dive into our analysis. So as we stand on the daily, we closed above the top of the range, we opened right at the top of the range, and that's telling us that short-term buyers are trying to take this thing a little bit higher, probably to all-time highs. But as you can see, I have this level drawn here. It's right around 437.34, where we should start to see some sellers. With all the earnings hype and big tech earnings being next week, especially with the hype that we saw from Twitter and Snapchat, I think we could be in for some more earnings beats, and the SPY might start to reflect that tomorrow. If we do get some sort of reaction to the downside and we take out today's low, then I'd expect to actually trade to the bottom of this range at 431. That's just something to keep in mind if we do go lower. As far as taking a trade to the upside tomorrow, I would be interested in taking one of the daily trades if we do break above that 436 level, or if we pull back and get some sort of bounce off of the 434.74 level. If we get a pullback there, then we watch for those premiums to decay, and then grab them while they're really cheap before they spike towards the end of the day. The ones I'm interested in playing around with are going to be like the 437.50 calls, with the 438. Any energy or break to the upside is going to make those things go crazy, so watch out for that. So next up, I'm looking at the Qs, which tracks the Nasdaq 100, and as you can see here, we're breaking out again. We've been talking about these big tech earnings coming up and how this could cause a reaction in the Qs. And like you see here, we're possibly heading up to all-time highs again, breaking out of this flag formation. Bullish continuation pattern. With big tech earnings being next week, I expect a lot of volume on this thing on Friday. So candle structure here, continuation candle, no wicks, and I would not be surprised if we head to all-time highs tomorrow. So we're looking at that level at 365.50. If we get the break of 365.50, that means investors are really excited for earnings next week, and we could see a huge day on the Nasdaq on Friday. Next, let's head over and look at some sectors here. So I want to watch the XLV, which is going to be the healthcare sector, and as you can see here, we were range bound. We sold off a little bit, we doubled the range, came back into the range, and now we broke the top of the range here, looking to double the range, and I think we could go all the way to 130 here. And as it looks right now, the healthcare sector doesn't look like it wants to stop. We're seeing the vaccine stocks and biotech stocks start to break out, so watch out for this. So the next sector I want to keep my eye on, and it's probably going to be the hottest sector tomorrow because of the earnings that we saw, is going to be the communications sector. So we saw Snapchat, we saw Twitter post incredible earnings, and as it looks after hours, it looks like this sector is going to be breaking out tomorrow. It's already above all-time highs, so blue skies level here, looking at whole and half dollar signs. Now before we go over and look at the next two sectors, I want to pull up the TLT, and this is going to track the price of the 20-year treasury bonds. So TLT represents the inverse of bond yields, so as bond yields go down, TLT goes up, and vice versa. And the next two sectors are going to be directly correlated to whether TLT is going up or down. When TLT is going up, that means yields are going down. Yields going down means interest rates are going down. And when interest rates are going down, people can borrow more, growth companies can go get loans and not have to pay back as much interest, so they can grow a lot faster. Companies who are not financially stable do not want to have high interest rates. So since the middle of May, we've seen TLT rising up rapidly, which tells us that rates were going down. And this means people were buying bonds, they were moving to defensive stocks because the spike in bonds was signaling a slowdown worldwide economically, and there was more fear about the COVID variants as more places started to lock down. There was also a fear that China was going to cut rates after they did cut their RRR, and then the news came out that they weren't going to cut rates right away. The market bounced and it looked like the reflation trade was back on. And this was all happening with yields getting the bounce too. And then today, as you can see on our TLT chart here, TLT was up, meaning yields were down, which is the opposite of yesterday and the day before, which led to this breakout for earnings. And I want to point out the correlation that we saw when it looked like TLT was going to get the reversal. When the bonds were running, we saw a move to safety, and when the bonds started selling off here, we saw that shift back into growth, back into the reflation trade, back into tech. But looking at the daily here, we got a long continuation candle off of a hammer candle that's right off of a support trend line. So what this makes me think is that yields might go lower actually tomorrow, and this could cause another market reaction like we saw last week, another move into safety. But one thing we need to keep in mind is that we do have big tech earnings next week, but it is not just big tech. Remember that we have the FOMC and Jerome Powell next week as well, so that's going to be something that could cause some volatility, especially if we keep seeing yields go lower. Today, as it is, it looks like these yields could go lower. It looks like TLT is going to go higher, meaning yields are going to go lower. If they do go lower, then I really do want to look at that utility sector and that consumer staples sector. But keep in mind, if they don't go higher, if they start to trickle out, fade lower, and break through this support trend line, then I think we're in the clear for tech earnings, and it could be a free-for-all Friday. But if we do get that move higher on TLT, then let's look at the XLP sector. So let's go over to do a technical analysis right now, and I'm looking at XLP first. And here we have this range, you know, an obvious range building up from 68.74 to 71.33. The halfback of this range is where we found support today at 70.07, which is a bullish thing. We saw that pullback, and we're seeing some respect above that level, that halfback level of this range, meaning we could go higher and test the top of that range again. And this is just something to keep in mind if that TLT does end up going higher. So we could see some more money pour into consumer staples and utilities. Here looking at utilities XLU, and as you can see, this thing really hasn't moved in 2020. It's been the slowest moving sector in the S&P, but as you can see here on the daily, we might get a breakout. This is a cup and handle pattern, so we had this bottom here, a long rounded bottom, and then now we got the handle forming here. So if we do see that TLT go higher tomorrow, we could see a move into safety, and utilities could be favorable, so look for that. So now that we have a broader idea of where everything sits, let's dive into the watch list, starting off with Etsy. And we've been looking at this all week. Unfortunately, this thing kind of shot up when it gapped up and premiums were already running, and we were looking at a few different plays, so we missed our desired entry on this one, which happened to be around $200 at that $200 break. As you can see, we shot through that $200 level, and now we could be heading all the way up to that $206.71 level. Say we break through $208 with volume, a lot of energy, a lot of momentum, I think we could honestly go up to 225 before earnings, and I really do have high expectation for these earnings. Tomorrow I'm looking to play the 205 calls, and that is on the break of 202, and if we do get that break, we should see those contracts flip and run really nice for us. Next, let's head over to Square, which is running really nice with the NASDAQ right now, and this thing did exactly what we expected it to. It broke through that 249 level, filled all the way up to 258.53, found a little bit resistance. Today it, you know, sold off a little bit in the morning, and then we spiked through that 258.53 level, and now we're heading up to this resistance trend line. Now if we do break out here, if we get the break, think about this balance. It has a lot of balance built up. It's been in this balance for 4 to 5 months. We know that balance creates excess, and when a stock breaks out of a huge balance, it usually runs really hard. Look at Adobe recently, look at Moderna, and if we do get this break, I think this thing's gonna run really hard. We've seen it run really hard before. There are a lot of people investing for the long term in Square. It has a huge finance tech advantage. We'll look for those 267.50 calls to decay early in the morning if there's any sort of sell-off, and then we'll grab the quick play to the upside. Next up is MasterCard, and this is another one that's been stuck in a balance for a really long time. Today we had a really nice day, long lower wick, a lot of volume. And one thing I'm really noticing is that towards July, we've seen a lot of volume accumulating here. And I would say this thing is in a bullish trend right now. And heading into Friday, we're closing green into this gap. I think we could head up all the way to 387. And the safe play would be to take the break or the bounce off of today's high. And then we're looking to get rid of the play around, 387. Or if we do break through there, if we don't really see resistance there, then we're looking to get rid of the play at this resistance trend line. And we're going to be looking at the daily 385 calls. We could see some jumpy activity in those tomorrow. Next up on the watch list is Yum Brands, and this is a play off of the pizza earnings. And if you didn't know, Yum owns Pizza Hut, Taco Bell, and KFC. And if you didn't see Domino's going absolutely nuts for earnings today, they did. And it's kind of hilarious how people's minds were not thinking about Pizza Hut because it's not its own brand. We saw Papa John's running up right away. We saw Domino's running up right away. And then all of a sudden people were like, oh shit, yeah, Pizza Hut is owned by Yum Brands. Oh yeah, and there's a bull flag breaking out. It's like no one was trading this thing for the first 30 minutes, 45 minutes, and then people started pouring into it. As soon as the idea became clear, we saw the break, we called out calls in our Discord, and we made 200% on these calls. Shout out to those in the Discord who've been making bank with us this month. We really have been having a good month. So if you're interested, the link is in the description below. Back to the charts here, looking at Yum, we have this obvious bull flag breaking out with a ton of volume right before earnings next week. I like this play a lot. I like the plays that we're holding. When you see a candle like this, it's easy to guess the next candle is going to be green. As we sit, probably heading up to 121.03 here for resistance first. From there, we're looking at 122.14 and then 122.73, which would be all-time highs. So definitely keeping my eye on Yum as we head into earnings. Next up on the watch list is T-Mobile. And looking at the daily here, you guys can probably tell why I like this candle. Long wick, a lot of volume, hammer candle, it's at support, and like we said, the communications sector is what we want to watch tomorrow, and this is one of those communications companies. Even though it's not a social media company, it could have some push and pull as far as the social media companies having some pull on that sector. So we still haven't closed below this 144.31 level. If we do go higher tomorrow, if we take out today's highs at 145, I'd be looking for the long to 146. Notice there is a lot of volume. We've got earnings coming up next week, and I'm thinking as a short seller, they all probably shorted underneath these wicks at 143.27, and then they got trapped underneath here, so they're probably about to cover if seeing this candle and a break above today's highs. So we could see a little squeeze upward tomorrow in T-Mobile, so watch out for TMUS. Head over to the next stock, which is DoorDash, and looking at this here, we had this recent retracement and we're seeing a lot of volume, a lot of buyers trying to take this thing a little bit higher. Now we're looking at this resistance at 183.67. If we take that out, then we're looking at these highs at 185.75. So seeing all these positive food and beverage earnings, I'm expecting some hype over the earnings in August for DoorDash, so keep that in mind. Looking for the breakout tomorrow. If we get it, looking to play those daily 187.50 calls. Next up on the watch list is Chewy, and this is one of those COVID winners. Looking at the daily here, really nice reverse head and shoulders forming after this downtrend. So heading in tomorrow, we're looking at this diagonal neckline to break so we can fill all the way up to 87.76. A break of 87.76 is going to be a quick fill all the way up to 92.23, and that's where we really could start to break out up into the hundreds. As it stands right now, bullish on Chewy, looking at this reversal, especially as yields were going down again today. And that wraps up tonight's nightly breakdown. If you got value out of this video, hit that like button and don't forget to subscribe so you don't miss another video that we post. Now, if you're looking for a trading family that's not focused on meme stocks and day trades, but rather real investing, swing trading, spreads, and all of the good stuff, then check out the link in the description below and join our Discord. Don't forget to upgrade to TradeFlare Pro, and don't forget to use the promo code TFPRO2021 for half off your first month. And don't be mistaken, we are not financial advisors, and nor do we claim to be. The stock market is risky. You could lose money, so use the information inside of these videos at your sole discretion. And as always, you cannot forget that time is your most valuable asset, so quit wasting it. Get up, get out, and go get it, my friend.